Many people would call drawbacks like higher cost than other solutions, slower transaction settlement times. But to us, those are features, not flaws, because it's part of why it is the safest ecosystem in the crypto asset world. So we don't look at those as issues. We look at them as really they've been built into the ecosystem to assure its success as the safest crypto asset ecosystem.
Since its inception in 2009, Bitcoin, the world's first cryptocurrency, has captured the attention of a diverse audience, including enthusiasts, investors, scammers, and increasingly, institutional players and regulators. For many supporters, Bitcoin represents not merely a new form of currency, but a revolutionary technology that introduces the idea of decentralized currencies, laying the foundation for an entirely new economic landscape, the cryptocurrency market. However, for others, it primarily serves as a vehicle for speculation. While some early investors become Bitcoin millionaires, many more face significant losses as they attempt to navigate its volatile price movements. Bitcoin's price predictions spark much discussion, with estimates reaching remarkable figures. Notably, Cathie, CEO of ARK Invest, suggests that Bitcoin could soar to $1.48 million by 2030 and expresses confidence that it may even surpass the $1 million mark sooner. Meanwhile, Michael Saylor, co-founder and chairman of MicroStrategy, forecasts that Bitcoin could reach an extraordinary $13 million by 2045. During a recent panel discussion at Consensus 2024, Cathie reiterated her unwavering support for Bitcoin, asserting, "It is a big idea and unstoppable. There's no throat to choke. When Facebook launches Libra, there is a throat to choke, but there's no such vulnerability with Bitcoin." In her analysis of the cryptocurrency landscape, Cathie emphasizes the distinct nature of crypto markets compared to traditional finance, which often adheres to seasonal trends influenced by market sentiment and regulatory changes. She points out that crypto prices can fluctuate dramatically due to specific events like mining rewards and halving. Criticizing U.S. regulations, particularly those from SEC Chairman Gary Gensler, Cathie argues that strict rules hinder innovation and lead some firms to avoid U.S. investors. She stresses the need for client education on these challenges and advocates for a focus on long-term growth. While recognizing Bitcoin's higher costs and slower transactions, she believes these aspects enhance its security. If you want to stay updated and understand what the top Bitcoin and cryptocurrency investors and leading thought leaders of our time are thinking, don't forget to hit that subscribe button and turn on post notifications for more videos like this.
Many people would call drawbacks like higher cost than other solutions, slower transaction settlement times. But to us, those are features, not flaws, because it's part of why it is the safest ecosystem in the crypto asset world. So we don't look at those as issues. We look at them as really they've been built into the ecosystem to assure its success as the safest crypto asset ecosystem. As I've said many times, has been a menace to our ecosystem and has pushed a lot of innovation associated with Bitcoin and other crypto assets into the rest of the world. So much so that many of the innovators who have moved to other parts of the world, whether it's Switzerland or Berlin or London or Hong Kong, Singapore, they will not deal with U.S. investors even. That's how bad it got.
Why?
Because they think they'll be tainted because we are regulated by U.S. regulators.
And why are U.S. regulators so strict?
You know, when you're a regulator, there's a lot of power seeking, and we know the history of the SEC and the CFTC. They've butted heads over the years, right? And we saw this during the derivatives, the evolution of derivatives in the 90s. And finally, with, I think, a Supreme Court ruling, they both regulate it, but regulate different parts of it. That is what I think was going on. There's a power struggle in the regulatory ecosystem. This is my purview. And so we may go to the Supreme Court again. I don't know. I think that was the main issue. Now there's something called regulatory arbitrage. And so that's what I mean by other countries very interested in attracting innovation are one-upping us. And I'll give you our first example. When we started ARK in 2014 was drones and the Federal Aviation Administration. So Amazon was on its 9th generation drone back in 2014, and the FAA would not let Amazon fly its own drones on its own property outside. It is only in recent months since that has changed. But in the meantime, one of the companies in our venture fund, Zipline, seems to have ingratiated itself with the regulators, meaning what we've observed is it has taught the regulators, prepared them every step of the way, for what they were attempting to do. No surprises whatsoever. So the FAA did start opening up a couple of years ago to Zipline. Zipline has a pilot going with Walmart in the Dallas, Texas area to deliver parcels. So, and so Zipline beat Amazon to its own game, which is really interesting. So, but this regulatory arbitrage, other countries, so Amazon went to Hong Kong, UK, Australia, India to test out its drones. And then the FAA became a little bit more understanding. I don't know why they didn't give the green light to Amazon sooner. But they did start giving the green light.
In her analysis of market volatility, Cathie emphasizes the critical role of educating clients about the inherent risks and potential for significant swings in the value of their investments. Recent market trends have shown how quickly asset prices can fluctuate, highlighting the importance of a long-term perspective. Cathie advocates for a 5-year investment horizon as a buffer against these market fluctuations, especially as inflationary pressures and interest rate changes continue to create uncertainty. She advises her clients to adjust their portfolios to maintain consistent asset allocations regularly, ensuring they are well positioned to weather the ups and downs of the market. Amid the current volatility and regulatory challenges in the cryptocurrency market, Cathie has reiterated the importance of understanding these dynamics. With the ongoing debate surrounding cryptocurrency regulations in the U.S., she stresses the need for investors to stay informed and adaptable. Cathie remains steadfast in her investment philosophy, acknowledging that she has become accustomed to market changes. She believes that understanding the market's cyclical nature, particularly as the Fed's actions influence market sentiment, and maintaining a disciplined approach can lead to long-term growth, even amid volatility.
I'm sensitized to it from this point of view. I think about our clients, and I think it's critically important for us to educate our clients. We're not going to be your entire portfolio. And some people in 2020, we were their entire portfolios. And, we were trying to say, no. Now we have papers, we're writing papers. And so we should be a small allocation and understand this is going to be a very volatile part of your portfolio. We're the closest to a venture capital fund in the public markets. We've always said that. And some people have understood that and other people have not understood that. So closest thing to a venture capital fund, we have a 5-year investment time horizon. We hope you do too. And so I do think about our clients. I think that our distributors, our partners, are the important conduits for that message, but we need to be out there more as well. And it's very important for us to say, look, if we've just doubled in a short period of time, you need to take profits. You need to rebalance, right? Because that will give you the psychological wherewithal that when we drop 50%, you will add back to this portfolio, because over time we should outperform the broad-based markets by a lot from this level. So I think about it from our clients' point of view. Are we preparing them enough, whichever part of the market we're in? And we've been in a very tough part of the market, and just convincing people, there's too much of momentum-driven investing. It's really bad. If you're buying high and selling low, I would think that's a very basic, tenet that you're trying to teach your audience. Do not buy high and sell low. Think about the other way of doing this. That's a much more productive way of investing. But in terms of day-to-day on the professional side, we've got a 5-year investment time horizon, and we're surfacing evidence, yay or nay, every day. Are these companies harnessing AI as quickly as we thought they would? No. We've made some important sales in this first half of the year because these companies were not. And this is moving very quickly, and they don't understand. You don't have time. If you don't do this, others will. And so this cleansing out period, I think, has been very important for us with this 5-year investment time horizon. So what we do in the short term, when the market's treating all of our stocks in the same way, we will sell one and benefit longer term from tax losses there and buy another stock that is also down and out.
As the U.S. Federal Reserve recently cut interest rates by 50 basis points, indicating it may have peaked in its rate hike cycle, this could catalyze a Bitcoin rally, according to Cyberas. When interest rates stabilize or decrease, cryptocurrencies like Bitcoin appeal to investors looking to safeguard their capital. This is largely due to Bitcoin's inherent scarcity, which acts as a hedge against the devaluation of traditional fiat currencies, especially following its fourth halving event. We'd love to hear your thoughts on Cathie's analysis in the comments section below. Also, ensure you like this video, subscribe to the channel, and if you want to know more about how government policies are impacting Bitcoin and other cryptocurrencies, then you have to watch this video next.